All right, so welcome to this live session. So, normally I do a recorded session of my weekly chat review but today I decided to go live and do a live class so that if anyone has question, you can ask the question in the chat box and then I can answer and address those questions. So, let's start with the analysis. So, this week was quite crazy. A lot of moves here and there, but I didn't really take a lot of trades in the beginning of the week. Most of the trades I took were getting to the end of the week. So let's start with this trade on Friday. So this is one of the trades on Friday, Euro GBP, and this was posted in the Telegram channel. So initially, this was a trade idea. Price was around here, so we're looking at a pullback into this zone here. But because of the price action above here, I was not really sure, so I left the trade. So when price grabbed liquidity here and came back into the zone, that's why I went in. But because it was Friday, I got out around here, and this was our target. See, price did not quite get to our target before dropping. So what can we learn from what can we learn from this setup? So because price was around this level here, the best point, even if I decided to go in here, the best point for putting take profit would be below this level. It means if I decided to go in initially when I wanted to go in, the best stop loss would be here, and then the take profit will be here. This is not a good risk reward ratio, 1:9. So at that point, I had to decide whether it is now up to you to decide whether that is a good move for you to go for or to ignore that, right? So that is one thing to take from that. And at that point, when price pulled back here, that was an opportunity to get a re-entry around here and then also around here, depending on if it is in line with your kind of trade plan, then you could add multiple entries on that. Right. Another one was AUD USD. So not the sell. I didn't catch the sell because the sell happened on Friday. I was not really paying attention on Friday. I was focusing on a weak USD. So I I didn't take trades in favor of USD. So it made me miss most of the opportunities. So I didn't take losses on those two. I just missed the opportunities. I just missed the opportunities on the USD pairs on Friday. So this was the one I caught during the news on AUD. So we had AUD interest rates decision and we had a strong AUD and we had price pushing up here. So I caught this move, like every bit of it, and I closed around here. But unfortunately, after that, I was focused on other pairs, so I couldn't catch this. This was a really clean retest here, a very nice one. So you have tap, tap, break, and retest. And if you look at the price action here, you see price pulled back, high pullback test, right? Row reversal and drop. So this was a perfect setup. And on Friday, when we had a CPI data coming in, we had another drop. So this was a really big push here. A similar thing happened on NZD USD, but because I was buying AUD USD assets, I think the news was on Tuesday. I didn't really pay attention to that as well. So around this level here, when the AUD news happened, you see the NZD USD made a small pop here and then dropped, created a lower high, and then a similar kind of pattern happened here. So we have price coming back to retest and then dropping. So that was really interesting. We see the same kind of setup, pushing back, pull back, and here. Okay, so this was pretty decent setup because the pullback also happened on a 382 or 618, depending on how you use your Fibonacci, and that was also a pretty decent move right there. Right. One pair that made me a lot of money this week. So two pairs actually, NZD CHF. So first was this move here. This move here. So we had price. So price has been correcting up. So initially this was the idea to take the trade on. I was looking at the spike between into this zone and then I'll sell down. But when price got here, it dropped and broke this low and then it started consolidating. So the idea was to take the sell on a breakout to the downside, and then it did break out. So I went in for the sell to the downside and I went in out before the low. And another one was on Friday. I didn't catch this because of time difference. I slept and I woke up. I almost missed a greater part of the London session. So the New York session, I went in here before the market closed. I caught this one here. I had a pretty decent lot size on that, so that was like so cool. Right. Another one was AUD CHF. AUD CHF was also a decent setup, very similar to what we have on NZD CHF. So same kind of idea. So here too, I was looking at price popping up to this zone here when so the zone is a little higher. So I was looking at price popping up into that zone for the sell, but the same thing, price pushed up, dropped, and consolidated. But this one was not, the consolidation was not so intense because AUD was strong. So CHF was struggling to drag it down. So we had a push, a pullback. I took this sell onto this trend line here. And then on Friday, the same thing. I didn't catch this move, but then I caught the last sell that happened here. So it was a pretty decent week. So the bad trades I took for the week was USD JPY. So I was looking at I was anticipating a weak USD for the CPI data. So and price was looking to test this level. So I actually made money from this trade, but I went in again and I lost the second time. So first initial move was here. After the news, we had a big drop here, right? And then when the pullback happened, I went in back again, and then price started pushing. It didn't hit my stop loss, but going into the weekend, I didn't want to hold any losses going into the weekend, so I closed in loss. But it was not that bad. That was like around 21 pips. It was still decent to hold. So let's look at this going into next week. What are we expecting? So currently this thing is still bullish. Let's look at a daily time frame. This thing very, very bullish. So I might be looking to go in if price hits the 127. So if we take off Fibonacci from here, we see that the 127 is just above here. And with the way the Dixie is strong, I'll be looking at something potential like this. If price pops up into anywhere around here, I'll be looking for price action. Okay. Oh, so this is on the daily time frame. That's interesting. So anywhere between this level here and then the 1.127, I'll be looking at the potential. Oh, about synthetics. Yeah. So like I will start talking a lot about synthetics. This channel is like very new, like, and I want to move with the forex flow, and then the synthetics flow would also come in, right? Yeah, so synthetics time will come. We'll talk about synthetics. It's just that currently my schedule is really tight. That's why like I don't post a lot of videos and a lot of analysis, but I try. So I also talk about synthetics. So hang in there. Synthetics time will come. Yeah. Yeah. So I'll be looking at a potential reversal here because the JPY, this is the only JPY that has not corrected. Even though JPY is still weak, don't be how do you call it, trapped by the move that happened on Friday. JPY is still fundamentally weak. JPY is still fundamentally weak until something happens. So let's quickly look at Forex Factory calendar. So this is this week. One second there. All right. So this week we don't have any major JPY news. The focus is mainly on the dollar, the Swiss franc, and the pound, and also the Australian dollar. So this week there will be a lot of volume coming in from the USD, Australia, Switzerland, and then Britain. So so mostly if I'm looking for a lot of volatility, if I'm in a week, within a week, if I am interested in a lot of volatility, it means I have to plan my trades around this pair because this is where major decisions are coming in. So in this case, what I would do is to pair this instrument together. So for example, there is volume coming from Australia, volume coming from Australia, the US, volume coming from Switzerland, and volume coming from Britain. So what I'll do is I'll pair these instruments against each other, and that is where I'll get a lot of volume. Yeah, so I was just about to switch to medium impact event. So we will talk about that. So there are some medium impact events on JPY. So we'll look at that. So what I would typically do is to pair USD, AUD, USD. So now AUD, USD, USD, CHF. And oh, I thought my screen, the marks I'm doing on the screen is not showing, right? I'm writing on the screen, but I can see from the stream it is not showing. That is terrible. So I need to clean it up. I thought that was showing. That is so unfortunate. What is this epic pen? Uh, it's unfortunate it is not showing. All right. So let's go back to trading view. I think I have to use trading view. All right. So from what we have with Forex Factory, we can see the instruments that have a lot of high impact events happening with them is AUD, USD, GBP, and then CHF. So within a week, if I'm trading and I'm interested in a lot of volatility, which means I want pairs that can really move a lot, what I would do is to pair these instruments against each other. So I'll take AUD, pair it with USD, pair it with a pound, pair it with a CHF. So I'll have the pairs I'll be focusing on will be AUD, USD, AUD. So I will also look at GBP, 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 AUD. I have GBP. Let me start. Let me do the AUD first. So I have AUD CHF, AUD CHF, AUD CHF, and the next would be so now we'll pay the US dollar with a pound. So we have GBP, USD, USD CHF, and now the last one will be GBP CHF. So these instruments are the instruments with a lot of high impact event happening, right? This has nothing to do with the direction these instruments are going to go. It means that because we have high impact events happening with this instrument, what is going to happen is these instruments are going to move. Which direction is going to move, we don't know yet. So if you are focusing on, like you are in a week where you are looking at a lot of volume, you want a lot of volume coming in on your instrument, you want to focus on this. That is how I go about it. This is if I want a lot of high volatility pairs to trade. It also means that if I am not interested in high volatility, I just want to focus on the slow pace of the market, not to be impacted by any news. The other thing to do is to also stay away completely from this instrument. It means that the pairs you'll be focusing on for the week would be something like CAD, NZD, Euro, and which other instrument? Just left with one more instrument, JPY, right? So if you are not interested in a lot of volatility, like you don't want any news affecting your pairs very significantly, then you also want to focus on this, right? So you pair these ones against each other. So if you're interested in a lot of volatility, you go with this. If you're interested in less volatility, it doesn't mean these news cannot affect this, but the impact here will be low because all these instruments are interconnected with each other. If you understand your correlation, you know that what happens with AUD affects NZD. What happens with USD would affect CAD. What affects pound would affect the CHF and then the euro, right? And the US dollar, the Swiss franc, it's all interconnected with JPY, right? So indirectly, they all affect each other. But if you are looking at instruments that would help you to avoid volatility, you go with these ones. If you want a lot of volatility, you want to see a lot of movement within the currency, then you go with the upper one. So that is the approach I use to either, depending on the week and the kind of impact and the account of the type of account I'm trading and how I want to be exposed to the market, then I would decide this way, right? So before we continue, I have a request here, CAD CHF. So let's quickly look at CAD CHF. CAD CHF. CAD CHF. If you have any other any pair you want us to look at, you can comment in the chat box and then I'll go through it. So that is the essence of the live session, so that I don't really I plan to do trade reviews on Tuesdays because the weekends is not the right time to analyze the market because a lot of things change when the market open. The way the market opens changes everything. The market can have a different sort of structure, but from the way it opens, it changes the whole game altogether. So mostly, well, I'm not saying it's wrong. At least when you analyze on the weekend, it gives you an idea of where certain levels are, especially on the bigger time frame. You get to know certain things and certain trades you can be looking at to to look at long-term trades, but the how I learned to analyze the market and how I've seen it's best for you to analyze the market is to wait for Tuesday. You can still trade on Monday. You can still trade on Monday, but the best time for you to be analyzing the market is on Tuesday. Right. So those of you who have taken courses from Smith Village, you are familiar with these concepts. Right? And a lot of other people also talk about this concept as well. Right. So we're on the 4 hour, but before we look at the 4 hour, let's quickly pop to the daily. All right. So on the daily, we have a double top, what looks like a double top here. Right. But before that, let me pop at the weekly. So on the weekly, this is still bullish, very bullish. So on the weekly, this is what we see. You see price broke this level and tested, and this looks very bullish. So you have to come with that kind of concept. Yes, on the 4 hour, on the daily, there is a double top, but you need to understand that the long-term direction of the market is based on the bigger time frame. So now let's pop out there. So now we have price breaking this level here, right? So price has a very high potential of dropping down here. It doesn't mean the structure has changed to bearish, because the only time we would now be uh, looking at bearishness is when we break this level here. So yes, double top, and we also have a liquidity zone here, and price tapped that level, right? Yeah, so price tapped into that level as well, but I don't know what will happen when the market open, if price will go back into the zone. So we have a tap into that level. So here on the 4 hour time frame, this is what I'll be looking out for a confirmed structure to show that this thing is going to continue going down here, which is a very big push here. What I'll be looking out for is a break of this level here, because price left another liquidity inside the zone here. So what could happen is price might consolidate a little bit and go back here. If price goes back here, I'll sell from here. But if price does not go back, I would look for the price action and then look at a trend line break or a break and retest of the low, and then I'll start going down. So this is kind of the idea with this trade. But for now, I'm not making any move, because going into, like, I won't make any move. That's what I mean. I won't make any move if I'm trading this. I would wait for either a corrective push to the upside. Right? Price might even try to fake out on this level, because price got here, they didn't touch this level here, even though the liquidity level was tapped into. Right? We have price tapping into the liquidity. And here we have another liquidity here created here. So we could see that corrective push into liquidity before looking to drop. But that's what I'll be looking at. Push up, I will look to sell here. If I'm doing that, my stop will be way above here. But the best case scenario is if price drops and break the low, and then we look for a lower high and then drop. One thing that you should also be looking at is we could still get a break and price would go back into the zone before dropping. That is also something to keep an eye on, right? So have in mind all these scenarios, and then you could now form a theory and then find the right entry, right? So that's what I think card CHF looks like. And I don't know how this news would affect the market. That's on Thursday. Okay, that's on Thursday. CHF. If we get a right, so the Swiss policy rate. Okay, so they have a negative interest rate, and if they don't increase interest rates, depending on, so any increase that happens here is going to result in a strong CHF. But if they don't increase it, how the currency is going to move is based on the press conference. So sometimes they don't increase the numbers, but when the governor is giving a speech after the release of the data, certain things that he will say, the way he expresses certain things. Okay, they didn't increase interest rates, but when do they think they are going to increase interest rate? Like all those questions and the way the governor answers those questions is going to affect the way the currency moves. All right. If your stop loss is above that zone and you are okay with price pushing all the way back before dropping, then you are good. I don't know where exactly your entry is, but if your stop loss is above the zone, then you are good. All right. How do you avoid liquidity swipe? I don't know your understanding of. So before I answer a question, I try to make sure that you understand exactly what you are saying before I start asking things, answering things that you didn't really ask. So I don't know your understanding of liquidity swipe and what you mean by liquidity swipe. So it will be difficult for me to explain what you mean when I'm not sure if you understand what you are asking. I don't know if it makes sense. So GJ is one trade that I didn't take because when price broke this level, I was looking at a pullback before selling, but we didn't get any pullback. Like for that is the kind of criteria I was looking before I go into the GJ. But it dropped and it was Friday as well. So I didn't want to do any crazy thing on Friday. But as I said, even though we have a double top here, I still don't see a weak JPY until we have a major fundamental, a strong JPY until we have a major fundamental change with the JPY. That's when I'll be looking for push. So here we might see price dropping further into this liquidity zone and pushing back into this level here. And from here, when price drops, that is where I will decide. When price gets into this level here, that's when we would know what is going to happen with the JPY. So if we get the push here and a push back to the upside here, around this level here, this is where price will decide whether it will break the zone or it will create something like that and continue to the upside. So those are the kind of scenarios to be looking out for. If price decides to break the low, then we have a confirmed long-term push to the downside. And we see the same kind of scenario happening on other JPY pairs, right? We have price approaching this zone here. We already tapped into this zone. We would come here at this point here. It's either we do this or we break and then we go down. So it's always good to, if you're looking at especially swinging your trades, it's always good to wait for the market to show you where it's going long term, and then you can narrow it in, because you don't want to jump the gun and then get in when the market is also still doing something else, right? So this level on card JPY is a little lower. So similar sort of structure. And if we look at the JP225, with JP225, it has broken this level here, which means we could go down long term. But what could happen here is price returning back into this zone. So I would be more confident to sell the JPY pairs when price comes back here and it fails to break this level. Then I know long term we can be pushing all the way down here. So that's what I'll be looking out for now. If that happens, that would be a really good confirmation for long term sales on the JPY. But for now, we could stop anywhere around here and break the high and continue pushing up. But that might not happen because we've tested this liquid level here. We've tapped into this liquid level. Looking to sell a double top, but price breaks it before selling. What do you think about the US economy in near future? Well, so that's why you don't have to just trade double top because it's a double top. So for instance, here, let's say you are buying here because you think it's a double bottom, right? Price comes down before pushing up. It is the market structure. It is you that decided to think that this was a double bottom and you decided to get into the market. But you need to have a good understanding of what is happening with the market and know that, okay, there might be a level here that price is looking to test. So even if you're buying here, you need to know that because of this level, your stop should be somewhere here. But if you buy here and you just put your stop here, price will tap that level. So mostly it's about understanding the structure of the market and knowing that where you are entering, is there a level below? Because your stop loss should go to where your stop loss is supposed to be, not where you think you should put your stop loss. So that is one of the main decisions you make in your trade before you decide to go in or not. So you have to know if that stop loss is good for you, and then based on that you decide to take the trade. So if you have two trades, A and B, you decide that, oh, I'm not going to enter A, but I'll enter B because maybe the stop loss where I can put my stop loss on A, the stop loss is smaller than where I can put my stop loss on B, right? So it's a very happy medium. What do I think about the US economy in the near future? Near future, very tricky. So this is the Dixie. So when you say US economy, you mean the economy or the US dollar? Because they are totally different things. It might not make sense to you, but the US economy and the US dollar are totally different things. It might not make sense to you, but when it start making sense to you, you understand. That's why when the dollar becomes strong, stock prices drop. So currently the dollar is super bullish, super bullish. If you look at a weekly, very strong. We had a really big recovery in the week. So I was after FOMC, when price retested this level here, I was hoping for this low to be broken for price to push up. But we have price failing to reject this liquidity and then pop to the upside. So right now, the dollar is still super strong. And right now, one of the major things that is affecting the US economy, is the price of oil. You know, the US, they depend, they don't have a good supply of oil for the entire country. So they depend on other countries like Canada and other oil producing countries for oil. And because oil is trading at a really high prices, $120 per barrel. This is really high. The last time price was around where the price is now was way back in the 2000s. So this is really worse for, it's not even just for the US economy, it's for almost every country. But the US especially, because their currency is mainly affected by the prices of oil, because most of the oil that they buy is from Canada, and the 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 more they purchase oil from Canada, there's a lot of transfer of value between the US dollar and the Canadian dollar. So it affects their currency a lot. So what long term would be happening to the Dixie would also be dependent on what the US oil would do. Right? Currently on the US oil, we can see the structure here. So here on the daily time frame, we have a highest point here. Price has created an intermediary high. The price has broken. So best case scenario would be price to break this level here. More of like test this level and drop here. At least for now, if price comes back down to 97 bucks, that would be a really great move for the dollar. And that would see the dollar still pushing, making a lot of moves to the upside. So right now the dollar is still very, very strong. Going into next week, what would be really good would if we even get the breakout here. It is most likely going to happen because bond prices are really high. So yesterday, no, today is Sunday. So I mean Friday. Friday we had increase in bond prices, bond yields, which is very good for the US dollar. And we also have bond prices dropping. The prices of bonds are dropping, and this is a big gap, here. If price decides to come fill the gap here on bonds, that means that the dollar is going to continue tanking. Sorry, if bond, let me come again. Let me not confuse anyone. If the prices of the US 10-year government bond decide to continue dropping to fill the gap, it means that the dollar is going to go nuts. You see the dollar flying like no one's business. So just be flying. It can even go up to 115 bucks. Right? So at currently, it is really, everything is looking good for a very strong dollar. Very strong dollar. Very strong. Until we see any significant changes happening, treat the dollar as super, super strong. So in that case, we can take a lot of advantage on pairs like USD So the best form of this has moved a lot. So this week, the entire week, so USD CHF making a push to the upside. The best scenario would be if we have some pullbacks here, right? So right here, I'm spotting some liquidity levels here. That if price makes a push to the downside, that would be good for a rally to continue. So if we get a push to the downside, we would continue buying this. Right, same for right. So that was nuts. So on Friday, when I analyzed this, so those in my Telegram, I discussed this. That was last week when I made a recording on GBP USD, and I was looking at the range. So we talked about the fact that this market is ranging. So we continue to buy, sell, buy, sell, buy, sell onto the breakout. But unfortunately, at this point here, I thought price was, oh shit, my battery is low. Let me connect my charge. All right, all good. So at this point here, on Friday, when I analyzed this in the morning, I was thinking this and the market switch, but I was not looking to trade. So I was not bothered. I was not looking to trade. Friday is not my best trading week, especially when I have a good trading week. No matter how the market moves on Friday, I'm not really looking to go crazy. So when I caught the AUD CHF, NZD CHF, Euro GBP, GBP CHF, like it was okay for me. I was not looking to trade like everything. So this is also really good. Long term, we could be seeing this at least coming to test the end of the range here. Because this has dropped a lot, we need to see some pullbacks. And one level that we can be looking at is this level here. So this liquid here is something that we can be looking at. The price comes back to this liquid level here. That would be really good. So I don't know what is going to bring price there, but anytime it does, that means we'll still be looking to short this down to the end of the range here. Right. So if we get a potential reversal here, we can buy this here and sell this here. But it might not go to the top, so don't go buy expecting it to. So if it pushes up, this is 180. If it pushes down, that's 300 pips. So there's a lot of potential on the dollar. A lot of potential on the dollar. So this NZD USD just got started, just like the other USD. This could drop all the way down here, right? We could test the 2.261.8 level here. All right, so we need to keep an eye here for a new high here, right? We need to ride the trend. So we have a low, we wait for a new high going into Tuesday or Wednesday, and then we'll ride it down. All the USD pairs, right? So the dollar is weak. Sorry, why do I keep saying weak dollar? The dollar is strong. Let's capitalize on it and make some moves on it. But I'm not really giving out trade ideas because I don't like analyzing the markets on the weekends when the market is closed. When the market is open, there are so many clues that you get in the market. Like I can make so much projection, but I've just decided not to do that again on weekends. Right. So let's capitalize on the dollar. If you're looking at a potential pullback on USD CHF, we should expect something similar also happening on Euro USD. Euro USD would be so good if price mysteriously comes back here. That would be so good because that is like a restart of the move, and then we can look to sell. So that is it for USD. The US dollar is looking super good now. We can capitalize on that to make some good money. But if this continues for a long time, it means this is really bad for stocks really bad for stocks. So we had US 30 dropping a lot, the Nasdaq dropping a lot. So you have an idea. So right now you just learned something new. Anytime the dollar pushes up, US 30, Nasdaq, and all the indexes drop. So something to study and learn something from that. JP225, Russell 2000, S&P 500, right? So that if the dollar continues pushing, that is bad for the stock market. It means the stock market to continue tanking, and that's also bad for crypto. We saw Bitcoin tanking to 27K. So that's, since we are on Bitcoin, let's talk about Bitcoin. So I'm still sticking with my 20K targets. So what will be very good is if this candle closes bearish like it is, and that would leave this liquid here. That means that at this point, nothing will be stopping Bitcoin from going to 20K. It will just be a straight tap into liquidity and then tank to. So the my target is actually 19.3K. That's where I'm actually looking at. If we get this bearish close here, forget. Nothing can push Bitcoin up again. It will just tap into the liquid and just drop to 19K. All right, let me look at the comments here. I make a video about news trading. So I know a lot about fundamentals and trading the news, but I'm not really a fundamental trader. Fundamentals are good. It will give you the direction of the trend, but I think I am more of a technical trader, like 90% technical trader, 10% fundamental. Like, but a 10% fundamental does not mean I know 10%. Like, I know a lot of fundamentals, but in terms of application, I don't like focus on, I just look at those data to look at long-term trade planning, like exactly what is happening on the JPY. I know the JPYs are weak. They are weak for some time now. So based on that, I'll plan my trades around them. So I would see if I would do that. I'm not saying I would, but I would decide if I want to do that. Do we start analyzing from the daily time frame? There is not really any good time frame for you to start analyzing from. The question you should ask yourself is, what is your trade plan and what are you looking at? So if you're a day trader and you are looking at trading on, let's say, the 1 hour and the 30 minutes time frame, knowing what is happening on the daily is important, but it does not really concern you. You could still take your short-term trades on your 30 minutes and your 1 hour without going to the daily. The highest you might be going to would be the 4 hour time frame. So it depends on your trade plan and what you look out for. So it is very, and there is not really any best time frame. What a time frame is price being represented in different forms by different times. So the candles you see is just a price and time analysis. So the time is just a summary of the candles as you increase the time frame, the candles get summarized. So it's the same story that is being told in different forms. So it doesn't really matter which time frame you are looking at. But if you are trading long term or you are looking at where the market could go long term, then you need to look at the bigger time frame. You could look at the weekly time frame, the monthly time frame. I don't really stick to any time frame. When I started trading, the focus was on 4 hour time frame, because that's what I was trading on, the 4 hour time frame, because that's what my mentor taught me and that was what I was focusing on. But when I understood the market and I started making decisions for myself, I learned to use all the time frames. So I don't stick to any time frame. I do monthly, weekly, 4 hour, 8 hour, 6 hour, 2 hour, 1 hour. But what I try to avoid is I don't do the lower time frames. I don't do 15 minutes. Sometimes Very rare case scenario, I do 30 minutes. Sometimes I do 15 minutes. Like, okay, I lied there. Sometimes I do 15 minutes, but it is in very rare scenarios you see me on the 15 minutes time frame. But the bigger time frames are better in terms of your trade targets. You get more pips if you catch a good trade. Your pips reward is really good. And in terms of market manipulation, there is not much manipulation that happens on the bigger time frame, but a lot of manipulation happens on the smaller time frame. So these are all pros and cons. So you have to decide on what works for you, but there is not really any best time frame that this is the one that works for everyone. It mostly depends on the strategy you are trading and what time frame works best for the strategy that you are trading, right? So there is not like a very perfect time frame that, okay, this is the best time frame that you can make good trades. No, there is nothing like that. Mostly based on your trade plan and what you are looking for and how that time frame makes you see what you are looking for better, right? Do I trade ETFs? No, I don't trade ETFs. I saw Bitcoin drop into 25K to even go lower than that. Do you do analysis on volatility index? Yes, I do a lot of volatility index. There was a time I was even trading more volatility, and people were even thinking I don't trade, I don't trade forex. So it's six now. It's six now. There'll be a time that you see me in a very VIX mood, and I'll be doing a lot of VIX analysis. So relax. So talking about VIX, let's pop into the VIX market because the market is still open. We could still take an advantage and look at some potential trades in the market. Yes, you can analyze on 15 minutes and execute on 15 minutes. It's all about what you are looking for and what makes sense to you. But yes, but it is good if you have like a it's good to use two time frames. If you as a beginner, if you're a beginner, I wouldn't advise you using two time frames. Stick to one time frame. So sticking to one time frame, you don't need to also stick to something that is lower. So if you are sticking to one time frame, I would advise either the 1 hour or the 4 hour. But if you are going lower to 15 minutes, I would advise you rather start from 30 minutes. So you'll be using the 30 minutes and the 15 minutes. So when you see something on the 30 minutes, then you switch to the 15 minutes to now see different version of it. So let's say you see price testing a level on the 30 minutes, right? You can now go to the 15 minutes and look at the 15 minutes and see how the candles are reacting to those levels. I think VIX pays more than currency. Well, it depends on your account size. It depends on your account size. Yeah, VIX is good. VIX is really good. I've actually made more money trading VIX than trading Forex, but I wouldn't still put a lot of money into my VIX accounts. I'm always conservative because of so many reasons. So it's easy to flip an account trading VIX, but I wouldn't put a lot of money into my VIX. I'll put more money into my Forex account than my VIX account because of correlation and the fundamentals and all those things. It could give you a good insight on long term what could happen to the currency, right? But with VIX, if you are doing a good analysis, you'll still be able to catch good moves and make good money. But even though it is less risky because things are more consistent, like you wouldn't wake up and you see like one big candle pushing up and all that. But long term, you don't really have anything that you are basing your trades on. It's just pure technical analysis. You don't know if there is Yes, if you study the market, you get to know that some of the instruments are correlated against some of the instruments, but there is no concrete fundamentals that shows that okay, VIX 75 is connected to this, and if VIX 75 pushes up, it will affect this. But at least you have this in Forex. You know that okay, if Dixie pushes up, GU, AU, NU, USD CHF would move in certain direction. So it gives you a really good guide on what to do long term, but you don't get that with VIX. That is one of the downside with trading volatility. So let's quickly glance through the VIX market. All right, so this is a level that I was looking at for potential reversal on VIX 10x. We have price tapping into this level. So this is on the daily time frame, very interesting. We have price rejecting from that level. So let's step down to the 8-hour time frame. So here on the 8-hour time frame on VIX 10x, price is still bullish here. We can see here, so if we look at the bigger trend of the market, we can see this market is what's trending down. So I'm not drawing a trend line. I'm just using these arrows to show how the market is flowing. These are not like trading trend lines, like how some of you are like use a trend line. I don't use a trend lines like that. Right? So price is kind of trending to the downside, but we have the potential of recovery to the upside, and we started that recovery from this level here. So here you can see we created a low, we broke this level here, we retested, price came back, a new high here, price testing this level, and price is back down to this level. Even though on the daily time frame we see price rejecting from this level here, I still see this as bullish because it's a test of this level here. So that's the kind of vibe I'm getting from the 8-hour time frame. So before I would think of going bearish here, what I would want to do is to do this. If price decides to break below the trend line, or best case scenario even here, that would be a good point to look for a selling opportunity down here to test the low here. And for a good buying opportunity, even when price breaks above here, it's still not good to buy because there is this liquidity level sitting right here. So let's go to the 4-hour and see if we can see a different picture. So that we don't really see any much difference here on the 4-hour. The only thing that pops up here is that okay, that rejection gives us a double top, but because of this level, we took out this high, price push back here. We still have the potential to do this. That's why I wouldn't shoot the gun to start selling from here. So if I were to start buying this, I would rather, if I were to decide on a trade here, isn't it confusing to use the same color for bearish and bullish candlestick? It is not confusing. It's actually confusing when you are using two colors. It's at least for me. But for your sake, let me make it two colors so that you should have said you are rather confused. I am the one using my chart. I am not confused. Oh, we've been going on for a long time. We've almost done 1 hour here. Right? Maybe I should be wrapping up here. So double top, but structure has not changed. The only time I will start looking for selling opportunity would be when price breaks below this level here. There's a potential for price to bounce up to the upside. So here At this point here, if I'm looking to take a trade, if I were to take a trade, I'll go for a buy, but I'm not doing that either. I'm going to wait to see. So if the next 4 hour candle rejects here and closes bullish, I could start looking for potential buying opportunities from here. Right. By this point, I'm not doing any of that. So let's look at V10. So V10 is very bearish. So right from the 4 hour time frame, what we can see here is a head and shoulders here. Head and shoulders. If we connect this, and this, we'll see that this is the same structure that price is retesting here. So we have this, and then price neckline, test, and then rejected. Right. We have price testing this level here. So this thing is very bearish. So when this candle closes, this is how you should get into this market. When this candle closes as it is now, you look at a pullback into this zone to sell. A pullback into this zone to sell all the way down here. Right, so all the way down here, that's a good sell. And if you decide to sell here, your stop should just go right above here. So if you sell in this zone here, your stop should just be above that level. This is actually the first time I'm going live. This is the first time I'm going live. And I'm not able to do live sessions during the New York session because of my time. New York session here is 10 a.m. and 10 a.m. I'm always in the hospital. So it's not really convenient. And during the London section, I'm sleeping. So that is where, like, timing is very important, especially if you're in Ghana and Nigeria. It's a really good opportunity because the time you wake up, that's when the London session is open. The time that you are ready to go within the afternoon, that's when the New York session is on. So it's a really good advantage. Like, I never knew, like, I knew how important time was, but I never knew how important timing can affect your trades until I moved here. And initially it was very terrible for me because I ended up trading when the New York session is almost about closing, and then I was trading within the Asian session because that was the time I was awake, and I was taking like really very, very terrible trades. My trades were really terrible until I learned how to adjust myself. So it's really affecting my sleep. If I want to trade the London session, it means I have to go to bed around 8 and wake up around 2, 3, and then stay till the London session, and then I'll go to the lab from there. So if you're in Nigeria and Ghana and other parts of Africa, you should be really grateful and take advantage and make some good money. Yeah. So this is V10. This looks like a really decent setup. Right? So if we get a pullback, you can look to go in here. I've already done 1 hour. Maybe I'll just do, I don't know. When I'm tired, I'll just stop. V25. So this is one mistake that a lot of traders make. So price started from here, it has dropped here. Because price has come here, then they start buying. This point is take profits. This is not saying buy. It's saying that if you sold, take profits. If you didn't sell, what business do you have? You don't have any business. You just need to stay away, right? So this was a good sell to this level here, take profit. And mostly when people take profit, it causes a pullback. So this is what most people would fall for. That pullback that happens after people taking profits. That people mistaking that for what? a change in trend. Nothing says change in trend. So if you see the market and the market is not giving you any structure, you go away. That's why you have so many instruments to trade. So don't make any mistake and get attached to any instruments. Trade what the market is showing you, not fall for. Damn, I'm so sad. I was supposed to take this buy. I missed the buy, but I pushed all the way up here. So let's see. Let's go to the daily time frame and look at this. So this is a really decent sell. We could see more sells looking at the daily time frame. We see this. We have this is like a ranging structure here. Right? This is like a ranging structure here. This is like a ranging structure here. So we could see price continue pushing to this level. But I wouldn't sell here because we could also pull back up. Even though that doesn't happen often. We could pull back before going to the upside, but I'll still not sell here. Let's look at the 8 hour and see if we see something different. So how I would approach this market here is to, I'm bearish, I'm looking to sell, but I can't sell here. So what I'll be hoping for, I'm not saying that is what will happen, that is hope. I'll be waiting for a potential lower high. So if price pushes back like that and gives a lower high, or any structure that does not break this high here, then I would look to sell at least to this level here. Right, that is how I will approach this. Because anytime I'm going into the market, the first thing that comes into my mind is risk. Yeah, this thing can continue pushing down, but if you sell here, this is where your stop loss would be. So why should I risk this to make this? It doesn't make sense to me. So I would wait for a pullback. If there is a pullback here, then if you decide to sell around here, it doesn't mean if you see pullback, go and sell. When you see the pullback going up here, you can now step down to the 4 hour or the 1 hour time frame to now look for the price action that is happening here and find an entry, and you can sell to that level, right? But this is a potential level here that price could come to, so I'll keep an eye here. If price decides to push back up here, that would be so good. We'll sell to this level here. So let me look at two more instruments and then we'll call it. So let's look at step index. Yeah, so I took this sell on the, was it on the 1 hour? Let me see. Yeah, so I caught this sell on the 1 hour from this level here. So that was a nice weak entry. I closed the trade, but it didn't hit my target. Where was the target again? Yeah, this is the target here. I was looking at this next liquidity here. So this looks like a good scalp into this level here. We have price pushing up here, and price failed to continue pushing to the upside. So this is a confirmation that price has no intention of pushing to the upside. So how you would want to treat this is to, let's zoom in. You need to wait for this candle to close, and it should close below this level here. If this candle closes below this level here like this, then you can sell. But before you decide to sell, think of your risk to reward ratio, because if you are selling here, let's say the candle stays here and close here. If you are selling here, your stop loss would go above this level here. So this is 1 is to, like, almost 1 is to 5. So you need to ask yourself if this is a good risk reward for you before you decide to go in the market. Right? This is just short term because we are coming into this take profit level. There is not really much that you can do, but price has the potential of coming even lower to this level. When that happens, that would make the potential of the trade great, because in that case you have almost 1 is to 3 risk reward ratio. So you could, if you have 2 entries, you can take partial profits and then see how price does, if it can go all the way to this level here. Right? Step index. I don't know what last instrument I should look at. Anyone have any specific instrument I should look at? I know someone will say VIX 75, but I don't like analyzing VIX. I trade VIX 75, but not on a regular. I used to, but I stopped. Let's look at 100x. So that will be the last one that we'll look at. Very interesting structure. Because price is coming to the end of this level here, I wouldn't want to. Okay, let me look at the daily time frame before. So that's a very tight squeeze here. I don't think I would trade this. I would wait for a break out of this range on the daily. So when price comes to a level like this, it's really good. It means that price is trapped, and when it breaks out, you see it and catch the move. So that's how I would like to approach this. But on the 4 hour, we have the potential to drop lower to the zone, but again, price could still go up before coming down, and the risk to reward is very small, so you don't want to take that kind of risk. Boom, 500 crash. Unfortunately, I might not be able to do that. I'll just look at boom 500, but I don't think I'll look at crash as well. If you had said it earlier before I analyze this, I would have looked at it. I've already passed, like, I'm almost doing 1 hour 30 minutes, so unfortunately I'll be looking to end here. So this one, I don't think I'll do anything here. I won't do anything here. This was a good sell here. A good sell here. Pull back, double top, another sell here. Currently nothing is happening here, so I wouldn't do anything with this. I wouldn't do anything. This is in a waiting mode, so we wait for the next structure. You could try and make some predictions that if it does this, I'll do this. If it does this, I'll do this. But I don't think I'm ready for that yet. So there is no trade here, according to how, according to me. All right. So I hope you had a nice time. I will try and do this often. And if you watch this video later, you can add some comments. If you want to learn something, you can comment below. If my heart is touched, maybe I might teach that. All right. So thanks for being on this live, and see you in the next one. And don't forget to like. If you've not subscribed, subscribe, share. Yeah. All right. Have a good one.